We've gotten a lot of labor data this week showing that things might be cooling off. So where does that leave this soft landing narrative? For more insight, we bring on the one and only Steve Stosnick with Interactive Brokers, and he is their chief strategist. Steve, talk to me about these inflation numbers that I was just breaking, because is this like too good to be true? You can really pick whatever data point you want right now to go with whatever narrative you have with this market.
Well, we've always had that ability. First of all, good morning, Madison. Good morning, Brad. But yeah, the market's always been somewhat malleable in that regard. Is, we'll pick the narrative that suits us, and at this point, we've been able to morph pretty quickly from soft landing, worried about hard landing, to now soft landing, worried about maybe we'll get no landing. Mm-hmm. But the one thing I will say about the consumer sentiment numbers regarding inflation is they're typically pretty well tied to the price of gasoline at the pump. And it's interesting because for the last couple of months, they were not coming down even as pump prices were. And I think it's as though this month people noticed, hey, wait a minute, gas got a lot cheaper. Right. And I do think that had something to play into it.
So the prints that we got this morning, whether that be on consumer sentiment front or whether that be on the employment situation, do any of these readings and the trend that we're seeing more broadly, does that signal to you recession?
As of now, these numbers do not signal recession. If you've got a buoyant consumer, if they have jobs, if the vast majority of people who want a job can get one or have one, we saw continuing claims fall. These are all positive numbers. Now, the question for the markets to reckon with is, Fed funds futures had priced in 5 rate cuts for 2024. This is not consistent with 5 rate cuts coming down the pipe. This was, since the last Fed meeting. The last Fed meeting was November 1st. On November 2nd, we were pricing in 3 rate cuts for 2024, and the first one probably starting in June, more likely July. Now we went, as of yesterday, we were at 5 rate cuts, with the first one likely starting in March, and if not, then May.
Right.
So things had changed a lot, and now we have to see that narrative unwind to some extent, and we'll see if Powell pushes back on that next week.
What does that unwinding look like today for those that have gone with the 5 rate cuts, pricing and narrative? What are they doing today to rebalance?
What you'll start to see, and I'm surprised we're not seeing it a little bit more, is a pullback, let's say, in shorter term rates, like the 2-year. You'd start to see them back up as those rate expectations come out. Those markets don't react quite as instantly. When I look, before I came on air, they backed off some of those expectations a little bit, but not fully. I still have to wonder whether, how does Powell approach this? Does he sort of have his usual sort of Goldilocks stance, at the FOMC meeting, where we get a little bit of this, a little bit of that, and the market can read him what it wants? Or does he kind of go a little more Grinch, at the meeting and sort of say, guys, you guys are wrong by thinking we're going to move this quickly?
I'm glad that there's more than one Grinch then, because they've been calling me a Grinch for days and weeks now since I said that this is a Fed that's going to, through Fed speak, pour some cold water on the markets. They did just that last week. People got mad at me, so now potentially we got another Grinch out there. That's good.
But they did it last week, and the market heard what they wanted to hear anyway.
Exactly. Right. Yeah.
That was kind of it. They gleaned the points in there that were sort of market friendly and ignored the vast majority of it, which was pushing back on this narrative. So again, this is the market. Right now we have a buoyant market. We see it now, I guess, today with consumer sentiment. But the market is buoyant, and it just has this happy note to it. And so why be bothered by inconvenient things like not, do we have the nirvana of rate cuts and a strong economy? I think they're kind of mutually exclusive. But right now, the market wants to believe what it wants to believe. And I will say unequivocally, the news from the economic front today is solid. It's good.
Does the Fed care about the market consistently being in the green, or do they only care if we're in the red? Does the Fed care much about positive buoyancy in the market getting too hot?
I think the stock market thinks the Fed cares about it much more than the Fed actually does.
It's like a bad relationship.
Exactly. It's a dysfunctional relationship, although it has been working out for markets for the most part over time. The Fed does get worried when market worries can spill into the broader economy. And I do think on the flip side, when they say, if they have to go in there wondering, if they've got room to adjust policy a little bit, and they say, well, markets don't seem to care. Let's do what we're going to do. I think they do worry a lot about fixed income markets, because that's really their bailiwick. Keeping banks The third leg of the dual mandate is making sure the banking system is stable, and making sure, that's their read on how the economy goes. I think they kind of view the stock market as sort of noise, or maybe some sort of backdrop as consumer sentiment. But that's why we don't really see them getting involved unless things really start to spill over in a really negative way that could affect the actual dual mandates.
Well, there's been a lot of noise this morning. I mean, we're taking a look at major averages right now, and even before we went into the employment situation, Prim, we were down fractionally across the board. We've essentially made a pivot in the exact opposite type of strength to the upside now for much of the U.S. major averages here across the board, now seeing the hat trick or the trifecta in the green. As we think going into 2024 and some of the top ideas that you have, what are going to be the sources of hope that the markets look to, or perhaps your top idea for 2024 even?
My top idea for 2024 is I do think volatility comes back a little bit. I think this idea that we've just sort of abolished volatility is, I think, a little naive. It doesn't go away for any length of time. It does return. And whether that starts next week with some negative comments out of Powell, or just the range of unforeseen circumstances, or the natural volatility that comes with an election cycle, makes me wonder whether, it doesn't make me wonder. I do think volatility makes a comeback at some point.
And what's the trade that initiates then?
That is keeping an eye on VIX, if you trade the VIX products directly, or it means the trade would be, being opportunistic in terms of you can tend to buy options more cheap. It behooves you to buy options when volatilities are low. It behooves you to sell them when they're high. Just like any other financial instrument.
Steve, before we let you go, just one word to describe the type of landing that you think we're going to get heading into 2024.
Bumpy.
Ooh, I like it. Not soft, not hard, just bumpy and choppy.
Exactly.
I love it.
I was on at least one of those flights recently. Steve Sosnick, Interactive Brokers Chief Strategist. Thanks so much for taking the time here today.
My pleasure, as always.